Andrew Harrex, Director of Investment Solutions at PE Investments Australia. Thanks very much for participating in the Inside Network's Alternative Symposium.
Thank you. Pleasure to be here.
Andrew, have we entered into a new investment regime or too early to tell?
I think we have. I think if you look at the last 2 decades, especially the last decade, it's characterised by low interest rates, low inflation, low volatility, and easy money. As we look at each of those 4 things in the next decade, they're all going to change. Interest rates are going to stay higher, volatility is going to stay higher, and I think that what that means for assets in the last decade that has been very strong, that was a good environment for things like property and private equity, and a bad environment for liquid alts. When I look forward, I think there's going to be more headwinds for property and private equity, but I think you'll see tailwinds for liquid alts.
There are multiple types of liquid alternative strategies, so how should investors think about a strategy that works well for their portfolio?
Yeah, it's a good question. We tend to put liquid alts into 2 categories. We think there's ones that are uncorrelated, might be trend following, but that means that when equities are down, they may also be down. And the second camp is those that offer genuine downside protection. And I'd like to think the PE FX Alpha fund is one of those downside protection. And so we tend to see those liquid alts spin into those 2 camps.
PE Investments talks about 4 core drivers of change in our society that will influence portfolio construction. What are they?
Well, these are things like decarbonisation, deglobalisation. Again, deglobalisation was characterised for the last 2 decades. Decarbonisation is really a trend. And both of those, or all 4 of those trends are going to be really evident in the next decade. But each of them will actually result, I think, in higher interest rates and higher corporate costs. Decarbonisation is really just a tax. It's not like a mining boom where there's productivity gains. It's genuinely a tax. Somebody's got to pay. And it's either going to be you, me, or the governments. That's just going to lead to higher costs.
Do you see your strategy as playing the role of growth, defensive, or income generating within a portfolio?
It can be all of the above. It really depends on the investor. We have clients that put it in the growth category. Over the 25 years we've been managing this strategy, we've outperformed equities by 1% per annum. So it can easily fit into that growth category. But because it's negatively correlated to equities, so it outperforms or does well when equities do badly, it can easily put in defensive category. And we've got clients in both.
What do you see as the biggest potential surprise for investors that 2024 could bring?
I think you're going to get continued volatility, and historically volatility has been good for liquid alt strategies and not so good for traditional equity strategies. So I think it's going to be more continued of what we've seen in the last year or so, that it's going to be volatile, and I think people have to look at their portfolio a little bit differently. Particularly the one thing I would add is that the correlation between bonds and equities in the last 20 years has been negative. And so when advisors put their portfolio together, they put in their model a negative correlation. We believe, because of the 4 Ds, that the correlation between bonds and equities is actually going to be positive in the next decade. And it has been positive for the last 2 years. That's a massive change for advisors and how they put their portfolio together.
Andrew Harrex, PE Investments Australia, thank you very much for being here.
Pleasure.